Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexbsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexbsummit.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, so let's take a look what's going on here on euro currency. Actually, by the result of the weekend, we could say that its most unlucky asset was a Bitcoin, has become the Bitcoin, because it's trading 24/7 and it has taken the whole impact from the mess on the Middle East, the confrontation between Iran and Israel. So it was big volatility there, and market still stands under effect of this process. On the other markets, Monday opening was like actually nothing has happened at all. If take a look at the gold, you could see on euro currency what the open we've got yesterday. Mostly market shows no reaction. Still some tension remains on the market because new information have appeared that still Israel is still thinking about the response on this attack, as different scenarios now are standing in the process of the discussion, but it hasn't denied this idea totally. So first information was that Israel will not respond by the request of in the call of the United States, but now the situation starts changing. We will see. But definitely we could say that currently demand for the dollar stands not because of the geopolitics. Because if we'll take a look at the performance on euro currency, here we could see that market stands strongly at the oversold area. This is not typical performance for the financial markets. Normally when it drops in oversold with this so significant penetration of this oversold line within the nearest sessions, it's trying to return it back up. It could stay at the oversold, but it should show some pullback here, some retracement. But here we do not see it. You could see that as on Monday, market has dropped lower, although it remains in the range of this Friday session, but still it was downside action. As on Tuesday today, you could see that's also downside action, and all this action stands below the oversold area. It means that some hidden pressure exists, or better to say demand for United States dollar exists. But if you take a look at the 10-year yields, you could see that is not because of the geopolitics, because on the 10-year yields, market moving higher, and yesterday it has jumped up to the 4.66 level. Where you last time have seen this level? It was last time ago. So it means that here is a purely economical background for the dynamic of the dollar, which is rising yields, make it attractive investing in United States dollars and support the demand for United States dollars for now. While the investors just treat it as attractive yield, they're not considering it like the inflationary factor, that the yield is rising just because inflation is rising in the United States, but not because of the some rising of the attractiveness of this asset. So, but anyway, that's the dynamic that is mostly based on the economical factor. Currently, if you take a look at lower time frames, and first on the daily chart, just to finish this picture, you can see that slightly below the market stands XOP. As market has ignored mostly the OP target that we had on the intraday charts, this is most nearest destination where market could try to go. It's 10580 area, suggesting that it stands together with the oversold. That might be an area where the market could try to show this pullback. On the full time frame chart, that's reaction on the OP. It was very small, but at the same time, you can see we have good thrust downside. We talked about this in the weekend as well, so we still keep watching here for possible Jordan Napoli patterns. For example, here the double repo buy might be formed if market will close above the 3x3. But here you have to understand one important moment. For us, since we're searching chance to go short, we actually absolutely don't care from what point market will start the pullback. Either it will start right from here, forming the double repo, or market will drop first to the XOP 1 or 580, then will start some pullback. We absolutely don't care because we are not interested. We're taking the long position, despite what the patterns will be formed around it. We would like to get this pullback based on some patterns that we are discussing, just for getting better entry opportunity for taking the short position, get better price, so as it called as a sell the rally. So that's our idea of the current plan. So forming the double repo here just fine. Upside bounce somewhere to the 1 or 730 area, it's great. We will just consider taking the short position here. Of course, it's not forbidden to trade it, as I told every time. If you have the confidence, you're like to trade on intraday charts, you know how to do this. Of course, you could try to use these bullish patterns and probably you could get even good result from that. But from the perspective of our major tendency and the trading plan for the daily chart, since this is our major time frame that we're working at, we're not considering taking a long position because our context tends bearish. On the hourly chart, I do not see something really interesting by far. The only thing that we could mention here is probably minor grabber has been formed here. And, well, actually, if something will start appearing, starts forming, probably we should get some reversal pattern. For instance, it might be the hand and shoulders. Very often double repo takes the shape either the bread and butter, either the butterfly or the hand and shoulders pattern. So that's the thing that we could keep an eye on. As you understand, in the current circumstances, despite that we see really thrusting downside action, this is the same story as it was last week on the gold. Despite that we have clearly bearish context, this is not the good point for taking the new short positions by far, just because of the reversal and nearing standing to the XOP target. From that standpoint, as a bottom line, if you would like to go short, our suggestion it would be better to wait for a pullback, to consider entry. If you would like to buy and you're searching chance to get some bonus from this oversold condition, that might be done only on intraday charts, and we suggest only you could consider the taking the long position if we get clear bullish patterns. So based on these patterns, just to minimize risk, theoretically you could do this. That's actually our 2 cents on euro currency, and let's see what will happen.